I've given up giving prices to people because people on the internet, they're just not nice. And so you get, oh, Raoul says this, so-and-so says that, it didn't do that. So I'll phrase it a different way, is we're seeing a much earlier ramp in the cycle than we've seen in the past, which is very interesting. It's very rare to be this strong this early in the cycle. Now, we are front-running some of the capital flows, and so there's probably some correction that happens by the rumour sell the fact. But I think if the space continues like this and we start getting monetary easing and the other conditions that tend to jumpstart the business cycle again, then we should see a very strong 2024 and most likely a strong 2025. Yeah, let me frame it for people in a way that people might understand it better. So I think many of us know by now that we're building some sort of digital network states. And we've been doing this over time, even over Facebook and all of the other social media. It's moving towards these online societies. And what crypto did was enable digital online societies to also have a system of money and accountability and finance and value transfer and all of this stuff, which is a new layer onto the internet. So we've created, and I've talked about this in the past, a parallel financial system. So let's call that crypto land. In the other world, which we can call fiat world, we have this massive but broken financial system and people still having to seek returns, and returns have generally been subpar for many in that, and it's difficult to participate. So how does so this new economy, I think of it like an emerging economy, crypto land. So how do economies work? Economies work, GDP growth is driven by population growth, productivity growth, and debt growth. Those are the three components that make GDP grow. So when you go to the fiat world, we've got aging populations and in many countries shrinking. We've got low productivity that may get changed by AI and other stuff, but it's still yet to be proven. But the old population is less productive. And debt growth stopped essentially in 2008. And all new debt growth is really just servicing of old debts. When we go to this new emerging economy, we have population growing at 100% a year, which is the number of active wallets. If you think of it, it had a massive recession in crypto land in 2022, and the population grew 42%. So it's like, okay, this is an amazing thing. So obviously GDP growth is faster. Productivity growth keeps increasing. Things like smart contract was a new increase in productivity for crypto land. Let's say compressed NFTs, maybe what Solana's doing with Firedancer, maybe ZK proofs, all these things are productivity increases. And then debt growth, well, we've just wiped out the debt from the last cycle, so we're going to rebuild debt again this cycle, because that's what humans do. They love a bit of debt. So now what you've got is this new digital economy that's not easily accessible to everybody. Not everybody's got a passport to go there. And then you've got this fiat world. And what this ETF is a trade agreement that fiat world people can go and invest in crypto land without having to be a native. They don't need a wallet, they don't need to self-custody, they don't need any of this stuff that we all go through every day as part of our lives, because we're citizens over there, but they're not. But what they've got is a free trade agreement. So free trade agreements really are all about, where do I get my highest return on capital? So people want to do free trade agreements with India because it's a growing population, large economy. It's the same thing. Fiat world will be saying, well, am I going to get a higher rate of return over in crypto land? In which case, I'll put some of my money at work there. That's why this is important. It's not about a single event of, we're just going to bring RIAs in. It's something much bigger. It's bridging these worlds. And then as the money comes into crypto land, it then finds its way into the other states within crypto land, whether it's Bitcoin land or whether it's ETH land or Solana land or whatever it may be. And it gets reallocated on the risk curve. Some of those are smaller emerging states and some of them are more established. So when people think of it like that, it's just an emerging market that's opening up for people to be able to invest.
In the realm of finance, a striking disparity emerges when comparing the conventional financial landscape to the burgeoning cryptoland economy. Traditional finance grapples with aging populations and sluggish productivity, creating a palpable contrast to cryptoland's dynamic environment. The demographic shift is stark. Cryptoland witnesses a staggering 100% annual population growth, injecting vitality into its economic fabric. Moreover, a pivotal moment in financial history occurred in 2008 when traditional finance experienced a halting of debt growth. This watershed moment, however, stands in stark contrast to the trajectory of cryptoland. Here, not only does the economy exhibit swifter GDP growth, but productivity is on an upward trajectory, marking a departure from the stagnation seen in conventional finance. As the economic cycles unfold, a notable divergence becomes evident in the approach towards debt. While traditional finance grapples with the aftermath of halted debt growth, cryptoland appears poised to rebuild its debt during this cycle. This difference underscores a fundamental shift in economic paradigms, where cryptoland emerges as a dynamic and debt-receptive player, challenging the established norms of the financial landscape.
Particular cycle is the everything, everywhere, all at once cycle. Because if we think about it, $67 billion went into VC into the space in 2020 and 2021. That money has been given out to founders who are building all sorts of applications and projects and everything else. Some of them will be infrastructure layer, some will be applications layer, and everything in between. And if you see the focus of where most of these teams are working on, it's kind of everywhere. So we're seeing the asset management, the fiat world companies are building on rails from cryptoland. So, this is Franklin Templeton. This is all of these people looking at tokenizing real world assets. I think that starts, the first wave of that starts. Then we're seeing at the other far end of the spectrum is everybody's focused on gaming because there's a huge audience there. So somebody's going to crack gaming in some respects. And pretty much every protocol has got teams working on that. We've got in the middle, things like compressed NFTs and Solana, I think are a much bigger deal than people understand because I think it allows for ticketing. And ticketing is at scale consumer application of blockchain, of which you don't need to know it's blockchain, which is what the space has been waiting for. We've seen some attempts at social media and other sides of that. Maybe we'll see more of that. The brands haven't stopped. So we're still seeing the luxury fashion brands in the NFT space. And I think we'll see a continuation of that. We've also seen the car companies, sports teams, and others. So I think that continued space builds out as well. So I think it's more the applications of technologies than technologies. I think we've also got the identity idea that's, there's WorldCoin, there's a few people who've started in that space, and then using zero knowledge proofs, which came around in the last cycle, the applications layer from that. So I'm just thinking it's actually going to be broader than people imagine. And it's going to be more inclusive because we've now got this trade deal, the ETFs, because I think, we've got the Bitcoin one certainly coming, and it's a pretty high chance we'll get the ETH one as well.
Delving into the expansive realm of investment opportunities within the blockchain landscape, a wealth of notable developments has captured the financial landscape. Substantial investments have poured into diverse applications and projects within the crypto space, underscoring the growing confidence and interest in blockchain technology. One compelling avenue of exploration lies in asset management companies, actively leveraging blockchain rails to tokenize real-world assets. This strategic move not only enhances liquidity but also introduces a new dimension to traditional investment portfolios. Beyond the financial realm, the gaming industry emerges as a focal point for numerous protocols, driven by its expansive and engaged audience. Blockchain's integration into gaming platforms signifies a transformative shift, unlocking innovative possibilities in virtual economies and ownership structures. A noteworthy advancement in the blockchain space comes in the form of compressed NFTs and ticketing applications. These developments represent tangible instances of how blockchain technology is harnessed to streamline processes, enhance security, and redefine the concept of ownership in the digital landscape. Further accentuating the versatility of blockchain, various industries, including luxury fashion brands, car companies, and sports teams, are actively exploring opportunities in the NFT space. This collaborative engagement between traditional sectors and blockchain technology exemplifies the evolving landscape of investment, where novel applications and partnerships continue to reshape the contours of the financial and cultural landscape.